Hi, everybody. This is Gary Dean, and this is our nightly video report for Monday, August 15th, 2016. So, we saw another gap higher today, and then we drifted a little bit higher, and then towards the end of the day, we saw some selling. And really the big thing is that just the rate of change, they're struggling to move this tape higher, and we're at all-time highs, so there's no resistance. It just everybody sees everything else that's going on, like the market breadth and a lot of the uncertainty, that there's just not a lot of people piling in to drive the price higher, but there's just no sellers either. So we're just having this zero volume drift higher that ends the same way every other one like this did, and that's in a crash-like move to the downside. Again, I keep saying crash-like because when you drop 200 points in a week, yeah, that's not a crash, but it's a crash-like move. It feels like it. Nobody believes that the market's ever going to go up, just like they don't believe that the market will ever go down. So the first chart, this is the VIX, this is the S&P. Notice that we have the VIX making lower lows as the MACD is in the above the zero line. Last time we saw that was right in this area here, and from that we had just an explosion to the upside of volatility, shocker. And I honestly think the same exact thing is going to be playing out. Right? There's going to be a volatility shocker. Nobody's protected right now because we can see where the VIX is, and we know that bullish sentiment is at extreme levels. We know that we have the wave count that is that's supporting a larger drop, and that's the 1, 2, 3, 4, 5. We have the bearish divergences. And this would be looking for a move down to the 2068, 2034. Now, I know it seems like it's never going to come, but I can assure you when it turns, the market moves down 20 times faster than it's going up. And you can see this, and it went up fast. But, I mean, these are this is what I believe is pending, like one of these moves here. And the reason why is because nobody's looking down right now. Everybody's looking up. And a lot of people are under this belief that they're not going to let the markets go down until the elections are over. And that's just silly, because you have 50% of the people that don't want the Democrats in office and 50% that want them in. So how are you going to control exactly what's going to happen between now and then? You can't. They just pretty much make that stuff up. But I think that's going to be probably the biggest trick, is people are going to think they're safe until after the elections, and they're not going to see this, this sharp 200 point drop that's going to happen in a week, and everybody's going to be bearish on the markets, and that's going to be time to start looking up again. So we have the bearish divergences. We have the wave count. This is looking for a move to come bare minimum 2092. And it could go as low as 2034. Now, if it trades within this pattern, then we're taking these lows out and we're heading down into the low 1900s. And that would make perfect sense with me as well, just because they've dragged this move out so long. When it goes down, it usually exaggerates to the downside. And, if everyone's looking for a 100-point drop, it ends up being 200 or 300 points on the S&P. So, that's it. We look at it. If we look at the daily chart, we have massive divergences. Here's the money flow. This is the rate of change right here. So this move right here redid everything. And look, as we drifted higher, the rate of change, which is the histogram right here, is going down to just about nothing. And when that happens, this is what takes place after. So, this is not a market to be complacent in, because they're not going to give you a second to get out of it. It is frustrating waiting for the short side, but you know what? Sometimes just being patient is, it's going to pay off, because when it's pressed to this level here, the move to the downside is could take a few days. So anyway, so we have the 5 waves on the 60-minute chart. This is probably the most important chart of the night. This is that bearish rising wedge I've been showing you guys. We hit the top of it. If they take out this 2182, most likely this wedge is going to be in play, and I would be expecting a move to come someplace into the 2157. But remember, we still have the 5 waves that's looking for a move to come much deeper than the 2157, and that's down in below below the 2100 level, 2092 or even 2034. So again, just don't be complacent. Don't look at what they're saying on TV, because half of them are just lying to you so they can get you in the market and have somebody to sell to. So with that, enjoy the rest of your night, and I will talk to you guys in the morning.